Today's episode of Market Talk is brought to you in part by Growmark FS. Keeping up on the latest in ag is a challenge to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And good afternoon. Welcome into Market Talk for this Monday, August 16th. I'm your host, Jesse Allen. Thanks for joining us, making us part of your day. MarketTalkAg.com is our home on the web as we are on the road traveling today. I'm not in my normal studio. I am actually at my parents' house in Iowa. We're headed out to Dakota Fest in Mitchell, South Dakota this week. We'll be there broadcasting live with the show the next 3 days, Tuesday, Wednesday, and Thursday. So we look forward to being on site at Dakota Fest for Market Talk. And we're going to be watching intently to a lot of different storylines this week and how they relate to the market trade. And joining us today, our good friend John Heinberg with Total Farm Marketing is pinch hitting for Brian Doherty from Total Farm Marketing today. So let's bring John in. And John, good afternoon to you, my friend. Appreciate you jumping in on a Monday here. You know, we have some different things to look at. As I mentioned, moving through this week, we got the Pro Farmer Midwest Crop Tour. We also are watching just kind of just some consolidation here today, you know, watching the crop progress report this afternoon. There's a lot of things at play here, but overall, it just seemed like we were pretty quiet, pretty choppy today, John.
Yeah, we were, and we do have a lot of things coming up over the next handful of days, definitely for the traders and, you know, the computers and the logarithm traders and the momentum traders. You know, a lot of different headlines coming out there, but truly, are they going to be what we need to know to move this market one way or another? Probably not, you know, at this time frame. You know, that's going to bring some volatility in. You know, we're going to watch those Pro Farmer Crop Tours come in to get their first set of numbers tonight, get to compare the West versus the East a little bit there. You know, again, still, it's just going to be a comparison of maybe what we're seeing. You know, watch what those crop ratings do this afternoon. We'll, you know, again, those are numbers that can move the market a little in that regard. But again, overall, what's the condition? What's the trend in that condition? You know, USDA came out, put some pretty good numbers out there for us last week, especially in the corn market on Thursday. Saw that big move higher, but now we ran a heavy producer selling on the top end. Prices fall back, things quiet down. Producers not going to sell when prices are down 30 cents off the highs. Feels like, again, we just got another range-bound market starting to build here around this 570 window.
Well, and looking at corn as well, and you know, I think we've seen this range-bound activity for quite some time, and you know, it's pretty much down to what we end up with for final yield. I know there's still a little bit of grain fill happening and everything else, and any rain that we get in the northwestern belt is really not going to do much at this point, if anything at all. What are your expectations here moving through this week? If we get numbers in from the crop tour and some of these other things that are pretty much in line with what we expect, do you think we're going to stay range bound, or do you think if we get some of those numbers in, it could pop us out to the top side in this corn market?
You know, I actually think we're going to stay on the range-bound side, you know, because Pro Farmer Tour does give us a little bit of a glimpse of where we are, but it's still going to come down to those USDA numbers. Now, first off, some of the market probably doesn't believe that big of a cut last week. Maybe things move a little higher in September, so they'll, you know, hedge some bets against that as well. You know, plus, obviously, you know, yeah, maybe late for the forecast in terms of some rain helping some regions, but if things stay cool, you know, that could allow some of these areas that are stronger to put a little bit more pounds on, in terms of help adding some weight to this crop. So, you know, this market's really going to be looking for some direction. And basically, we're probably not going to see it till we truly get out in the field and get the combines rolling and start seeing some yield numbers come in that are accurate. You know, even the USD report that we get coming up here in September, that's going to be based off of field trials. And, you know, we'll see where things go there. You know, producers filled out those surveys the first part of July when that crop was heavily stressed. And maybe they're a little bit more aggressive in terms of what they thought was out there for reductions, you know, that we've seen that happen in the past. I mean, just don't forget, last year the USDA raised yield 3.3 bushels to acre on the August report, only to turn around in September and take it all back off again. You know, so maybe this is a type of situation we could flip that way as well. You know, the biggest thing for me in the corn market right now, it still comes down to demand. We kind of got an idea where the numbers are. The USDA maybe scared the market a little bit by very quickly chopping some demand factors on this report, keeping that carry out at 1.2 for next year. So that's something I'm still waiting to see. We're not seeing those export sales. We're still struggling on competitiveness with those global prices. So either the market's going to hang out here and wait till global prices come up and meet us, or maybe we start searching for demand by bringing prices down. So that's something that's on my radar right now. If we don't start seeing some corn get sold, the USDA can very easily chop another 100 million off the next report. Next thing you know, carryouts back to 1.3 or 1.4, and especially if we get a yield adjustment, that could be the other direction. There's just a lot of variability out there right now. For producers, you got a little bit of an opportunity to sell a little corn here. Nice little pop in this market. 570 is a heck of a number to get some more bushels going. And even looking at the 2022, there's some good value out there, and I think producers need to make sure they're moving grain here, or at least make sure they're building that floor and keeping the top sides open.
Now, on the soybean side, you mentioned demand. 8 straight days here this morning with another export sales announcement. There's a lot of rumored China interest again. We got a lot of unknown destinations out there, which a lot of folks are going to assume that's China until we hear differently. But what are your thoughts on the soybean market? That seemed to be kind of the ray of strength today with some decent numbers, at least in beans and in meal. I know bean oil was a little more mixed, but what are your thoughts on the soybean picture and some of this demand that we're seeing come back in?
I still like it overall in terms of the longer term view. Obviously we drifted prices back. We became cheaper than those South American beans, and immediately the Chinese step in and start picking up some cargoes. And obviously the ones that get reported are probably half of what is getting reported, not reported under the table. We'll get those in those weekly export numbers. So I like the fact $13 seemed to bring some buyers in. Even today we drifted back a little bit. Prices seem to find some stability. I'm still very cautious though. The weather market's now going to be the soybean market. And you look at those extended forecasts, talk a little cooler, maybe a little wetter. We'll see if that materializes. That could add some bushels into this crop. USDA did chop a little bit off that yield last week, but truly the yield in September will be the key yield for determining this crop going into the end of the year. So we're still a little cautious here that all of a sudden if we see things kind of move up a little bit in terms of the production side, but regardless, barring a major move, we're still going to have extremely tight supplies. And now we just need to figure out how aggressive the Chinese want to be buyers into this market, and what's that do for the market overall in the fall. I expect it to be very similar to last year at this time frame, especially if the crop's a little bit tighter, that we're going to be wanting to move these beans quickly to get them on boats, get them overseas, and you're going to see that basis kind of pull this market higher as we get into harvest. Like I said, especially if that crop doesn't grow much from where we are now.
On the wheat picture, John, it seemed like, wheat was leading overnight. Then we came into today, we kind of fell off, a little mixed action, choppy there, global supplies tightening, but maybe a little profit taking. Was that the case in wheat today, you think?
That's what it feels like. We had a lot of spread trading happening last week with the wheat, and wheat got itself a little bit overextended, and now we're kind of settling down. We're watching what's happening with those European wheat prices, and we've seen the milling wheat price continue to climb to new highs. Russian forecasts have been cut back, so this is a little bit more than just the northern plains and what's happening up there. I still like what wheat's trying to put together here, at least like I said, consolidating today. Maybe we need a little bit of news, probably some demand to maybe push this market one more leg higher if it's got it. But at this time frame, again, a lot of good value. I'm looking at July 22 wheat at $7.45 for next year. I know I've been talking with some producers about getting the toe in the water and protecting that already at this stage. Because when you can put $7 on the board for a wheat price, that's a pretty good starting spot.
That is a pretty good starting spot. And I think overall, you look at the entire grain sector, there's quite a few good starting spots. You alluded to that with corn as well, and I know soybeans too. It just feels to me like this is a window here between data sets, between reports, that if I'm a producer, maybe looking to do a little bit more marketing, try to figure out some things, maybe forward market into 22, it just seems like now is a good time to really make some of those decisions before we get into the heart of harvest, John.
No, I agree with you totally. We got a nice push higher in the market here across the board off that report. It's an opportunity to get some more bushels locked in. We got to look beyond just what's happening in the grain markets. There's a lot of things that are concerning right now in terms of the global side of the equation. Obviously, what's going on the geopolitical front with Afghanistan, what's happened with the Delta variant of the virus, and does that come into play? some concerns regarding the Chinese economy and what's happening over there regarding COVID flaring up again. If those things all start rearing their ugly head, and we can quickly see that, we're a headline away from some money moving out of this market. So right now, our producers got to ask themselves, where's my biggest risk? And to me, it's to the downside. You need to make sure you're finding a way to protect things, even if those put options go worthless. I'd rather see that money go worthless, keeping prices here versus not doing anything at all. Or like I said, if you feel comfortable selling the bushels, move some more grain in here. And if you want to stay in the market, look at those call options, especially if this market were to roll back a little bit, like we typically do in a seasonal window here from now until the 1st of October.
John, let's flip over to livestock. And today, the hog market kind of shot out of a cannon and really did its best to hold there today and did a pretty good job. That October contract had a pretty big discount to the cash index, and that's one of the things we're kind of watching very, very closely. So talk to me a little bit about the hog market, what you saw there today.
That's truly what I think happened today. We got August off the books on Friday. We're holding a $20 plus discount from the cash index, basically to that October contract, historically wide for that time frame. So this market's trying to play a little catch up. I was kind of curious to see how it would play out. Would the October be moving and the index come down very aggressively to kind of meet in the middle? Now we got plenty of time for that to happen, but definitely you saw some buyers step into that discount today, with that $2.40 jump in that October contract. So then we got to come back to, we need to see that retail demand kick in. We need to see those prices continue to firm. A little bit of concern, last week's export sales numbers, China was kind of absent again from that report. So that's a little bit cautionary going forward. But at the same time, we still got good meat demand. There obviously is still some buying from the retail sector here, trying to keep prices supported. So a good little breakout in that October contract. Now maybe we can get back up into the 90-plus window, and that might get a little heavy. But at least here, we got a little bit of movement, at least to the upside, based on the technical side of things, maybe more than the fundamentals.
What about the cattle market? Feeder cattle struggled today, even with corn a little bit lower, and I'm wondering maybe was that little residual left over from last week's numbers with the WASDE. Live cattle were okay today, a little bit better than feeder cattle. Obviously, we did see some green there, but talk to me about this cattle market, John. What are you seeing as we start off the week?
Quickly touching feeders, maybe we're a little bit toppy here. We'll have to keep a close eye on that. We got up into this 160-plus window. Couldn't get back through that contract high here about a week or so ago. I'm talking more like the September, October contracts. Now maybe we're pushing, today a softer close. Technically, looks like the market might want to roll over a little bit here. Even with that strength in that live cattle market on the deferred contract side, it might still be just a window where feeders are stretching themselves out a little bit more than we need to see compared to that cattle price. Obviously with a tighter corn supply picture, that might just bring a little bit of caution that those prices could come back around, and maybe that's weighing on the feeder market as well. But right now it's starting to look a little bit more technical. On the live cattle side, it's all about the retail demand. We got choice carcasses pushing 327 today at midday. The high from the spring was 340, so we got a good run out here. Maybe we go back and challenge that high. There's a couple factors there. The Packers have been keeping slaughter pace, 116, 120,000 head a day, so that kind of keeps the supply picture a little tight. I would say the Delta variant has some issues there as well. Maybe some of these retailers are a little concerned that we could see some issues on the, on the meat production side, so they're bidding in here to lock in some of them fall supplies. So we got to kind of watch how that plays out. Now, the biggest thing is cash market just doesn't want to really kick in. Maybe we'll get another buck or so this week, which doesn't reflect those 327 carcasses. So, right now the cattle market looks a little cautious. Tomorrow might be a pretty big day. We'll have to see how things trades out. Looking at that October today, 129.5 or real close to that on the high. Again, kind of like feeders. Didn't quite get back through those old highs. Kind of softened a little bit. We'll see what tomorrow brings us, because last couple times we've gotten up here, it's kind of turned into a sell point more than a buy point. But if prices can find a way to break through, then there's going to be some definite money flow into that cattle market.
John, any other final thoughts you have for us here on this Monday? Anything outside market-wise? I know you touched the geopolitical factors there a little bit. So anything with that, or anything you want to reiterate today?
Keep an eye on crude oil. We had a pretty hard break this morning. It did hold support, kind of coming back a little bit, but still going to finish on the negative side of the coin today. That's starting to become a demand story. Obviously, we are very concerned regarding what could be happening globally with the Delta variant of COVID. Does that start coming into play? Watch that Chinese economy and some of the news that comes out of there. If that starts to weigh in terms of that crude oil demand and that price breaks, we could easily see that trickle over into the commodity space. So this might be one of those time windows, where crude could be an indicator what might be seen coming forward. So that's something I was watching this morning, and it made me a little bit cautious. Again, don't forget about seasonality here in these grains. This is a window where prices will like to work lower. The funds in terms of corn are sitting on a very large position. It wouldn't take a lot of news for them to just quickly air out a bunch of contracts, drop this price very fast, and then get down to maybe a level where they feel like they want to buy aggressively again, given those numbers. But seasonality is still something I keep on my radar between now and the 1st of October.
John, producers need a little advice, need some help. I know they can reach out to you and the team there at Total Farm Marketing and find you guys online, give you a phone call. A lot of ways to connect, isn't there?
Love chat with them anytime. Feel free to give me a call, 800-334-9779, or shoot me an email at johnh@totalfarmmarketing.com. And don't forget about our website, totalfarmmarketing.com. Again, a lot of great information there for producers, as well as the mobile app that goes with it. That's where I get my daily quotes when I'm on the road coming off our app. So take a look at that information, and love to chat with them anytime.
John, appreciate you pinch hitting for Brian here today. As always, it's a pleasure. Thank you, sir. And we will talk to you again soon.
Sounds great, Jesse. Have a great week, everybody.
John Heinberg with Total Farm Marketing, our guest today here on Market Talk. Find us online, markettalkag.com. This has been the Monday, August 16th edition of Market Talk. I'm Jesse Allen. Have a great afternoon.